Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome viewers to another episode of Pathways to Prosperity. Tonight we discuss an interesting topic, savings and investments. As we enter into the month of savings, everybody may be wondering, what are the best savings products available? How do I go about putting a savings plan in place? And all of these questions that are associated with the general idea of saving or investing. And so tonight we're joined by an expert in the field, Ziyaad Chothia, one of the financial advisors from Standard Bank. Ziyaad, assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Ameen, thanks for allowing me the opportunity to be on the show. And assalamu alaikum to the viewers as well.
Thanks, Ziyaad. Ziyaad, one of the terms that we hear thrown around a lot of the time, and people may feel that this is some complicated thing that they need to do, is this thing called the financial needs analysis. So can you dumb it down for the audience? What is a financial needs analysis? Why do we have to do it? Why is it such an important thing that a consumer should do?
Very good question. In the world of financial planning, that will be our starting blocks.
Right.
So if you take a client and he needs a plan, or he has funds that he'd like to be investing, but he has no idea as to whether it is sufficient to retire with, whether he has assets that create liquidity issues in the event of death from an estate perspective.
Ziyaad, what does that mean? Assets that create liquidity issues. What does that actually mean for somebody that's a non-finance person?
So if we take an individual and his built asset value, right? In the event of death, what are the impacts on the estate? Estate duty, executors fees, capital gains tax.
Right. So what that means is, let's say I own a house.
Yes.
And the house is valued at R1 million. If I die, my beneficiaries will have to find the physical cash to pay the tax of the estate.
Absolutely correct. Absolutely correct. So in the event of death, if there's no liquidity, if there's no cash inside the estate, what would happen? The executors would then have to sell asset values, sell assets to ascertain that liquidity in order for the deceased estate to settle the bill.
Okay, so the financial needs analysis then basically takes stock of what the consumer's balance sheet is, what assets they've acquired, what liabilities they have, and you do this liquidity calculation, and then you put a plan in place for the shortfalls.
Let's take one step back.
Yeah.
Right? An individual comes, he's got pension value, or he's got pension fund at work, he's got a retirement annuity, or maybe one or two retirement annuities, and he's got capital value built in different investments. So now this individual says, okay, listen, I'm 40 years old, I want to retire at 65.
Yeah.
Do I have sufficient capital available?
Yeah.
So we gather this information, we put it into the analysis tool, and based on inflation as well as current growth yields that are available or that are yielding on this particular pension funds and retirement annuities, you can then determine whether the individual has ascertained that level of retirement savings that he aspires to have, or whether he needs to contribute further to these vehicles in order for him to ascertain financial freedom.
Okay, Ziyaad, you spoke about different products in there. You spoke about pension funds, you spoke about retirement annuities, you spoke about liquidity requirements in the estate. What are some of the products that a consumer would need to have in a congruent financial plan?
Taking a step back again,
Yeah.
when we do the financial plan, now, if the client has retirement savings, he needs to contribute more to retirement. That will be one of the most important parts of a client's portfolio that he needs to have, is a retirement annuity. Why? Number one, he wants to save for retirement. Number two, a retirement annuity is the most tax deductible, or it's the only vehicle that allows tax deduction. So you want to have that in your basket of portfolio, right? Furthermore, if your estate does not have liquidity, you want to have risk products in there. And alhamdulillah, today with the banks, there are Shari'ah risk products available,
Right.
that can alleviate your liquidity issues in the event of death for the estate.
Right. So the two most important products would be a retirement plan and a risk product to ensure that upon death you have sufficient liquidity in your estate.
That of course agreed. That would be the products that you need to have, and notwithstanding the fact that you want to have investment products. Right. So that being whether it's be short term, medium term, long term investments. So you've got in terms of your short term, you have your low risk yielding Shari'ah profit sharing bank accounts. Right. Medium term, you probably want to look at unit trust or even endowment contracts.
Okay.
Right. So an endowment, if you're a high net worth client and you want to be parking money or investing money for a long term, it's probably a lucrative investment vehicle to consider. Why? From a tax efficiency perspective, as well as estate planning friendly. So in the event of death, the money is then distributed to the respective heirs of the investment rather than forming part of the estate and taking a longer time for the heirs to get their money.
So can I put it into three categories here? You've got retirement that you need to consider. You need to consider liquidity at event of death to cover estate duty and taxes upon death. And then the third category would be savings and investments. And in that savings and investments, there's a world out there of different products depending on what your need is. Okay, let's get into a different topic linked to the savings and investment stuff. Another term that we hear a lot of the time being thrown around is asset classes. What are asset classes? What is asset classes? What are the different asset classes available to the consumer?
So, like you said, it's a world of asset classes.
Yeah.
Now, naturally, an individual can invest in one of four.
Okay.
Right? Cash being cash, we know what cash is: bank accounts, low yielding investments.
Right.
You got
low yielding, but also that means low risk.
Low risk, absolutely correct. Right? Then you got equities.
Okay.
Invested on the stock exchange. Now, as we understand, equities being long term, but again aggressive.
Okay.
Aggressive meaning the returns on the investment could go up, could go down, but again, a consideration within the equity space, you should have a long term horizon in mind.
So equities meaning you taking your money and you are buying equity or you are buying shares in actual trading businesses that are listed on the Johannesburg Stock Exchange.
Correct.
Okay.
Absolutely correct.
So the risk you're taking with that investment then would be you're taking the risk of investing in a company. That company may go bankrupt. That company may land a new contract and increase in value. So that's the risk associated with equities.
Absolutely. But again, with equities, over time, what we realize that not only economic fundamentals affect equities, but a lot of sentiment. So tomorrow, the US Fed could come out and say that interest rates are coming down or interest rates are going up, and that has a direct impact on equities.
Okay. So equities, volatile market, long-term investment horizon.
Long-term horizon.
Okay.
The appetite for us, they're aggressive.
Okay.
Right? Then you're looking at bonds, and in the Shari'ah space, we say sukuks.
Right.
Right? And notwithstanding the fact that we have the opportunity for commodities, gold, silver, that being value assets. So over time, what we understand with commodities, and that it's an inflation-beating investment. Okay. So it will always yield to inflation, and you'll see a very, I always use this example. I said, when I got married 20 years ago, right, a Kruger coin was valued at 9,500 Rand.
Okay.
And today, 45,000 Rand.
Yeah.
So it just gives you the insight to say that it keeps us with inflation.
Okay, so the four big asset classes that are available in the universe: low risk assets like cash, which is a bank account and a savings product at a bank; equities, higher risk profile, long term investment horizon; fixed income instruments like bonds or sukuk; and then inflation or store value assets like gold, silver, and hard commodities. What about your alternates? Like people want to know about crypto. Yeah. Is that considered now a new type of asset class? Does it fall in within the existing 4 categories of asset classes?
Again, if I have to look at, and I always use this as an example, and I tell clients that, listen, if you're an aggressive investor, today we want to see money made yesterday. That's basically what we're looking at, or quick money. We saw 5-6 years ago what happened with crypto. It was high up there, and next minute it was down. So again, it falls in the risk category of aggressive investing. If you're going to buy into crypto, there's no quick money to be made, long-term horizon.
Okay. Ziyaad, this sounds complicated to an ordinary human being that didn't study finance, that doesn't work in finance, that doesn't deal with these type of things on an ongoing basis. It's a complicated affair. How does the layman navigate this complex universe?
My advice would be for an individual to get into touch with a reputable financial planner, right, who will then guide him, do his financial needs analysis, understand the needs associated to that analysis and how he can cover those shortfalls, right? Be it retirement planning, be it needing risk products for estate liquidity issues. And of course, from an investment perspective and the asset classes that we made mention, he'll do a risk analysis on the client, right? Determine his risk, and then of course guide him to the correct asset managers who then offer these various asset classes, property, cash, bonds, and then he can get his money invested correctly into this financial into the different instruments, and then hopefully enjoy retirement and financial well-being in time to come.
Ziyaad, I have one last question before we terminate. You know, we've heard many times from people in conversation, you're at a braai. You know, typical scenario, you're at a braai and somebody will say, my broker is a shyster, he stole all my money. You mentioned there that they must find a financial advisor of repute. What would be your advice to the consumer on how do they identify whether they should be dealing with a particular financial advisor or broker or somebody that is portraying themselves as one? What would be your advice to identify a registered authorized broker?
Today, the qualifications that you need, the highest qualification within the financial planning industry is the CFP, which is a Certified Financial Planner. We need to do our normal yearly CPDs. So just ensuring that the client firstly comes from, be it a reputable financial institute such as Standard Bank, and associated with the different investment houses. But like I said, being a certified financial planner adds value too. And of course the clients, the individuals or the financial planner's track record will hold some water.
Ziyaad, Jazakallah khair for joining us today. Viewers, we were talking about the world of savings and investments, the different asset classes, financial advice, and putting together your financial plan through this tool that is known as the financial needs analysis. And an important parting advice is when you're trying to identify that financial advisor, ensure that they are associated with financial institutions that are of repute and registered with the relevant regulatory authority. Look at their qualifications and their track records as well. And inshallah, then after that, we put a plan together and we know that Allah is the best of planners. We then leave our affairs to Him, inshallah. Until next time, Assalamu alaikum wa rahmatullahi wa barakatuh.